So this trade was taken today, that means 23rd of April 2024. The stock name is CHAMBAL Fertilizer. And in order to understand this, we have to look at the daily chart 2 days back. That means here, 19th of April, Friday. So in this chart, price is getting reacted from this inefficiency, and my idea is it will first reach these relative equal highs here, and after that, after some time or maybe a few days, this swing high. So based on that idea, we were monitoring this in the next day, that means Monday, yesterday, 22nd of April. So let us come to the Monday range for this stock. So this is the Monday range. This is the range for Monday, and this is the 50-minute chart. So initially in the morning, we clearly observed that price was reacting from this order block, 15 minutes order block. As you can see clearly, it came down, reacted from here, and from here it created a bullish fair value gap. And so therefore, we were thinking that we will take some trade from here. So this was a bullish order, FVG, and also we can see here the last down close candle, which is the order block, has this high, and this high is right at the middle of this fair value gap. So when this happens, this is a much healthy refinement of the process, that from where this is a big range of price in the 15 minutes chart. So from which area we should take a trade. So in this situation, when the high of the order block is coinciding with the inefficiency, so this line itself becomes our point of interest from which we can go long. As you can see here, in the Monday, price never came back here in this line or even in this inefficiency. So we were just waiting, waiting and waiting. So then what happened in the next day, that means today, you can see here, this was the fair value gap that we have drawn yesterday in the 15 minutes chart, and this is the order block high. So as you can see here, price first opened up, created a relative equal high here, and then it came down and down, and right at this point, I mean, this too one can see this type of too much accuracy from the type of stocks. But anyway, so it just right from this point it started reacting and created a bullish value. So then, as we can see here, this was an inefficiency that price created when it was coming down, and after that it created this bullish fair value gap. So basically, this fair value gap negated the idea of this previous fair value gap. So this becomes a BPR, or balanced price range. And so we took a trade from this BPR, not exactly from here. We drew a fib from here. So from this low to this high, and this was our 50%, 370.85, or I think it was 375.9, something like that. So anyway, that is not the point. So I took my trade from 370.9, as you can see here, from 370.9. So from here, keeping my stop loss right below this low and my target here. This is 370.9. And as you can see, this is a 2.8:1 trade, and we achieved the target quite easily up to this relative equal highs. This was our target. This is also the previous day high. And so this was the entry and this was the exit. So this is an example of how to take a trade using the balanced price range concept. That is, the fair value gap of the opposite side is completely violated or negated by the recent fair value gaps. So then the recent fair value gap becomes the BPR. And so it is also another example of following the previous day analysis. So instead of leaving the chart as it is, like we did not get any entry in the previous day, so we could have just left behind this particular stock and have done something else. We did instead doing that, we waited for the next day to see whether the price actually takes our discount array, and then we took trade from here. So that's it. Now it is 11:55 and I am searching for further trade, not in this stock but in other stocks. So let us see if I get something else. Otherwise, this is a profitable trade for today.